Does Europe need a banking union? It's one idea thrown up by the debate on how to break the link between the weaker peripheral Eurozone economies and their equally troubled banks. So could it work and will it happen? With me is Reuters Breakingviews editor Hugo Dixon. Hugo, I think one of the most telling lines in your piece, quite close to the bottom, Europe is not ready for banking union any more than it is for political. Let's face it.
Yeah.
This is an uphill struggle to reach this sort of union.
Yes, it is. But it is also, just as indeed with the political union, and you talk about it as an uphill struggle. I mean, if you're climbing in the Himalayas, maybe that's too much, but maybe you can do some of the foothills first. And perhaps it's worth just defining for our viewers what we mean by a banking union. And in the sort of fully fledged banking union that people are talking about, they're talking about a centralized system for regulating, supervising banks, bailing them out if need be, and packing them off to the knacker's yard if they can't cut it. And also then paying out depositors if there's a shortfall. So that's what people are talking about when they talk about a banking union.
And that you don't think is realistic?
It's not politically realistic.
It's not politically realistic.
It's not politically realistic, and it's actually not, strictly speaking, essential to deal with this problem, which is the banks infecting the sovereigns and the sovereigns infecting the banks, which is the double whammy that you are now seeing playing out right across the European periphery.
Can a banking, and you pose this question as well, can a banking union stop the banks from buying sovereign debt? No.
No. So there are two parts to this. One is the banks being infected by the sovereign, and if you have a banking union, you'll still have Italian banks and Spanish banks and other Greek and Irish banks or whatever owning large chunks of their own country's debt, and that still will be a problem. Now, in fact, part of the problem that we saw as a result of this LTRO, the ECB's injection of a huge amount of money into the system over the last few months, although that dials down the market jitters, it actually led to banks buying more of their own government's debt. So you've got that problem, which a banking union will not deal with. You've got to deal with that in some other way. You've just got to gradually wean them off it. But the other thing, which you do need to tackle, is the infection going in the other direction, where the problems in the banks can then make the governments go bankrupt. And that was particularly the case. The real case of that was Ireland.
That's right. Okay, so your solution, if you like, or at least your hike along the foothills of the Himalayas.
The foothills of the Himalayas, rather than Everest itself.
Is to cherry pick bits of this big idea which is politically unrealistic. And which bits would you cherry pick?
Well, the most important one is what's technically known as a resolution regime. And what that means is a mechanism to allow banks to go bankrupt or to be to effectively to be dealt with when they are insolvent in a way that doesn't create chaos. And in particular, what it means is that bondholders should face a haircut. And if bondholders of banks that are in trouble face a haircut, then there's less need for the taxpayers to come in and bail them out, because you're bailing in the bondholders. You don't have to bail them out, and therefore you should avoid the problem that Ireland has got into, and which now it looks like Spain may get into.
And then finally, the other piece is this deposit guarantee scheme.
Yes. Now, I don't think, again, that we're ready for a European-wide deposit guarantee scheme. But what you could have is a sort of reinsurance scheme. So you've got the national deposit guarantee schemes, and then you could have somebody like the EFSF or the ESM, these European bailout funds, that could guarantee the guarantee schemes. And that would provide an extra measure of protection and would sort of lower the tempo, I think. And it would I mean, these are not magic bullets, but they would help deal with the crisis.
And how realistic is this cherry-picked, slightly watered-down union, do you think?
Well, I think that the resolution idea is becoming fairly realistic. The European Commission is, in the next 6 weeks or so, going to come up with its solution, its paper proposing this. The European Central Bank, which had been very much against haircutting the bondholders in the Irish case, if you remember, they now have turned 180 degrees. I mean, they're not saying they've turned and changed their view at all, but it seems to me that they've done a total U-turn. Several of their board members have come out making speeches in favour of such a resolution scheme in the last few weeks. So I think that actually is looking like it's got a fairly good wind behind it.
Okay. We will see. Hugo, many thanks for that. Hugo Dixon. Tune in to Breakingviews Europe on the Insider platform and Reuters.com each weekday, 10:30 London time. I'm Axel Threlfall. This is Reuters.